Howdy, folks. Welcome to Liberty Call. Today is Friday, February 16th, 2024. I'm 50 years old and one day. Woohoo! Anyways, hope you're having a good day out there. It is a bit overcast here in Colorado. We got some snow coming tonight, only a couple inches, but still aggravating when you got to go out and clear a little bit. I don't know what's worse. Is it a foot of snow or just a little bit? Because either way, you got to get out the snow blower. And if it's just like a little bit, I got this little pusher, which is real easy to use. But anything more than like 2 or 3 inches, it's too hard to use. So, anyways, if it is your first time watching Liberty Call, I'm glad you were here. It is a Friday. It is what's on the docket for this weekend? College basketball. Cougars play again tomorrow. I think they're playing Texas. So I think that's on TV. It's on my DVR already. So I haven't had any Cougar basketball all week. They took a whole week off. How dare they? So anyways, but like I said, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, a share, a subscribe, a follow, and press that notification bell. Me and my boy Jake, we're going to go out and endure the chilly weather to go play some ball as soon as we're done. So let's get this moving. All righty. Let's get to the markets and see how they perform today. Not in a good mood, unfortunately. The Dow Jones was down 0.37%, 145 points. It closed at 38,627. The S&P 500 down 0.49%, closed at 5,005. NASDAQ down 0.82%, closed at 15,775. The VIX up 1.86% today, or 1.93. It just changed. It's at 1428. Canada up 0.16. Brazil up 0.74. And Mexico down 0.3. In Europe, Germany was up 0.42, the UK up a percent and a half, France up 0.32, the Netherlands up 1.24, it's not Italy, Spain down 0.41, Italy up 0.12, Switzerland up 0.23, and Portugal up 1.19%. Russian exchanges both red today, the MOEX down 0.76, the RTSI down 0.2%. And the Asian markets, the Nikkei in Japan was up 0.92%, Australia up 0.69%, New Zealand up 0.68%. The Chinese markets were closed except for the Hang Seng, and it was up 2.48%, and the rest of them were closed. All righty, so that is what is going on in the markets for today. Let's take a look and see how they did for the week. Let's get my lines off of there. All right, starting out with the Dow Jones. Looks like it's going to finish the week off fairly flat, down 0.07. The S&P 500, it's going to finish the week down 0.49%. The NASDAQ, start right there, it's going to finish the week down 1.35. The Dow Utilities finish up 1.18. And the Dow Transports, not good, down 3.66%. So that's the big loser of the week. So, but all in all, let's take a zoom out and go to the daily chart and see where things are right now. So let's zoom out over the last couple of years, and we'll start with the beginning of 22. We can see the downtrend broke the downtrend in late 22. Traded sideways most of 23, and we had a little bit of an uplift and then a downtrend again in the fall, and then in October we have this really quick or steep ascent, much more steep than any of the others that you can see if we back up and look at others. I mean, this one was just like whoop, nearly straight up. We zoom in, we can see we broke the trend on, what was that, Monday or Tuesday? Yeah, Tuesday, when we had that big down day, and we'll see what happens. I mean, pay attention to this over the next week. Is is it gonna go back up above the trend line and continue, or are we gonna trend sideways or trend down? So that's the big question right now. Like I said yesterday, it was the $1 million question. Very similar chart here with the S&P 500. It has not broken below this trend line yet. So that's, I guess that'd be positive news for the S&P. And let's look at the NASDAQ. Same thing. It has not broken the trend either. So, all righty. Well, that is all your chart education for the week. Hope you got something out of that. All right, let's go to the economic data that came out this week. Initial jobless claims came in at 212,000. Forecast was 219. Last week's number was 220. Continuing claims came in at 1.895 million. Forecast was 1.88 million. Forecast or last week's number was 1.865. The consumer price index year over year that came out earlier in the week came in at 3.1%. Forecast was 2.9. Last month's number was 3.4%. The month over month growth was 0.3%. The forecast was 0.2. Last month's number was also a 0.2. So we'd had 2 months in a row of 0.2, and then we went up to 0.3 here. So still not a whole lot of price reductions. I mean, yes, inflation is slowing, but we're not seeing a lot of price reductions. Industrial production year over year grew at 0.03%. The previous number was 1.17. On a month-on-month number, it contracted by 0.1%. The forecast was 0.2% growth. Year over year, retail sales year over year grew by 0.65%. Last month's number was a 5.31. And on a month over month number, we had a 0.8 contraction versus a forecast of contraction of negative 0.2. Housing starts came in at 1.331 million. The forecast was 1.45. The previous number was 1.562. The month over month number, we showed a housing starts contracted by 14.8%. The forecast was for zero, so it was expected just to stay flat. Last month's number was a growth of 3.3%. Producer price index year over year grew by 0.9%. Forecast was 0.6. And on a month-on-month number grew by 0.3%. Forecast was 0.1. And the last data point for the week, the consumer sentiment came in at 79.6. Forecast was 80. And last month's number was a 79 flat. So it did go up a little bit, just a little below forecast. All right. So that's all the economic data for the week. Exciting stuff. I mean, hey, we don't have chaos in the streets yet. Cross our fingers. Hopefully it happens sooner than later. But, I don't want to be like 80 years old and out there fighting the revolution. I mean, I'd rather do it at, 50 in one day. Anyways. All right, let's get to the market recap. U.S. stocks fall as fresh signs of hotter inflation muddies rate cut outlook. On Friday, U.S. stocks experienced a downturn after the release of data revealing a faster than expected increase in wholesale prices in January, leading to a surge in Treasury yields. The 2-year Treasury yield rose by 10 basis points to 4.674%, denting expectations for aggressive rate cuts as the producer price index exceeded economists' forecasts. This data, coupled with recent surprises in consumer inflation, clouded investors' expectations for monetary policy, raising concerns about potential tightening measures. Amidst this backdrop, Coinbase Global saw an impressive over 8% rise after reporting fourth quarter income that surpassed Wall Street estimates. The approval of spot Bitcoin exchange traded funds contributed to the increased activity on the crypto exchange platform, driving its performance. However, DoorDash experienced a more than 9% decline as softer guidance overshadowed better than expected earnings and revenue in Q4. The food delivery company's weaker Q1 guidance signaled potential deceleration compared to its competitor, Uber Eats, raised concerns about its market share and growth trajectory, although some analysts viewed the dip as a buying opportunity. Similarly, Nike faced challenges, falling over 2% following its announcement of plans to cut nearly 1,700 jobs. This restructuring initiative fueled worries about the sports apparel maker's ability to sustain growth, contributing to the negative sentiment in the market. In the tech sector, Google's parent company Alphabet contributed to dragging down overall performance with a 1% decline. However, losses were mitigated by an Applied Materials-led rally in chip stocks. Applied Materials Inc. Surged 6% after delivering strong guidance and quarterly results driven by robust demand for advanced chips used in AI applications. Conversely, Roku experienced a significant 23% drop despite reporting better than expected quarterly results. Can't make anybody happy. You have better results and your stock drops by nearly a quarter. Concerns about slowing platform growth overshadowed its performance, prompting analysts to revise down price targets on the stock. Macquarie, for instance, reduced its price target on Roku, citing muted implications for platform growth and operating costs for the remainder of the year. This emphasized the cautious sentiment prevailing in the market amidst uncertainties regarding economic indicators and corporate outlooks. So, again, kind of a good news, bad news for this Friday. All right, next up, I got a report here on the January PPI. Comes from our friends over at First Trust. I'm just going to read this verbatim. It's pretty short, so we'll blaze through this. Following in the footsteps of Tuesday's CPI report, producer prices came in hotter than anticipated, complicating the Fed's path forward. While headline prices rose 0.3% in January, the inflation was limited by continued declines in energy prices, which fell 1.7% in January, following a massive 31.6% annualized decline in the fourth quarter of last year. Food prices, the other typically volatile category, also declined in January, down 0.3%. Stripping out these two components shows core prices rose 0.5% in January, the largest single month increase since July. That said, the 12-month rise in core prices has been easing since peaking at 9.7% back in March of 22, and now shows core prices up 2% from a year ago. Diving into the details of today's PPI report shows the dichotomy between goods and services. Services prices rose 0.6% in January in spite of a drop in costs for transportation and warehousing. Meanwhile, goods prices declined 0.2%. However, energy played a central role in the drop in goods prices. Strip out energy and goods prices rose 0.2% in January as prices for communications equipment and soft drinks moved higher. Further back in the pipeline, processed goods prices fell 0.2% in January and are now down 3.8% in the past year. Meanwhile, unprocessed goods prices rose 0.1% in January, but remained down 15% in the last year. Further easing in inflation appears on the way should the Fed have the patience to let tight monetary policy do its work. But inflation risks rearing its ugly head once again should the Fed falter and overreact in the face of weakening economic data. The markets and the Fed itself seem unsure how soon or how quickly rate cuts will come. We believe patience is a virtue. I agree. So again, here's some good news. Some things are coming down in price. Again, it's not an across the board thing. My trips to the grocery store are still not going down by any stretch of the imagination yet. So, but we're getting there. All righty. Last up, article from Zero Hedge. It's titled Fed Chair Powell just said the quiet part out loud. And this was from Lance Roberts via realinvestmentadvice.com. See what Lance had to say. In Lance Roberts' article on realinvestment.com, he discusses Fed Chair Powell's recent comments on surprisingly strong employment data, shedding light on underlying issues often overlooked amidst robust statistics. Roberts highlights narratives reflecting the struggles of job seekers, even those with college degrees, amidst conflicting reports of record-breaking employment figures. Despite optimistic employment reports, stories of recent graduates' job hunts underscores a disconnect between statistics and lived experiences. Roberts delves into the complexities of the labor market, citing shifts in demand and industry disparities that contribute to the challenges faced by job seekers. He emphasizes the impact of offshoring, technological advancements, and the service-oriented economy on employment dynamics, detailing how these factors affect wages and job availability. Moreover, Roberts scrutinizes immigration's role in shaping the labor landscape, distinguishing between the effects of merit-based and lower-skilled immigration policies. He highlights the consequences of an influx of unskilled on native-born workers, echoing concerns raised by past administrations about its implications for employment and public services. The article concludes by addressing the broader economic implications of these trends, including the potential for reduced consumer demand and slower economic growth. Roberts warns that despite advancements in technology and automation, the outlook for recent graduates remains challenging, particularly as artificial intelligence threatens to disrupt traditional employment models further. Overall, Roberts' analysis offers a comprehensive exploration of the multifaceted issues impacting employment trends, providing valuable insights into the nuances often obscured by headline figures and political discourse. Yeah, and the article is linked in the show notes, so if you want to go and read it in full, it has a couple of anecdotal stories about college graduates with MBAs and how they can't find work. So I think that's probably some of the downside of having such a service-based economy. There's not a lot of people out there who know how to make stuff. I'm glad that in my youth and in my younger years, I knew how to take apart an engine or an airplane and put it back together. So I do have those skills. So if if electricity goes away, I am still quite handy. I can fix things. So, um, but for younger folks, not nearly. I mean, I advise everyone have your kids take shop class, learn to weld. I mean, these are things that are disappearing out there. Plumbing, learn how to plumb. These are things that are disappearing, and if you don't know how to change a tire, I mean, what are you gonna do when your tire goes flat on the side of the highway? Wait for AAA? No, get out there and get the jack and do it yourself. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to hang on, DSAFinancialGroup.com. All my contact information is there. I hope you have a wonderful weekend, and I shall talk to you next time. Adios.